Hello, I'm Attorney Lewis Haskell, and today is June 17, 2020. It's a day that many of us have very much been looking forward to because today the SBA has finally released its updated PPP Loan Forgiveness Application Form. And even better, it has released two forms, a short form and a long form. And I am going today to talk about the short form. I do have the long form loaded. I will make some references to it, but I don't think I'm ever going to make a video about the long form because, frankly, if you need to fill out the long form, you're just not doing it right. And so if you think you're going to need to fill out the long form, it is worth it to meet with somebody and talk about what you're doing wrong. In any event, let me come up and show you now the brand new Paycheck Protection Program PPP Loan Forgiveness Application Form. You can see that it is 1, 2, 3 pages. And the third page is really just for information about the owner. So this is much simpler than the bear of a form that came out a few weeks ago before Congress changed the law. There is the long form still, and it is 5 pages, and it still has that old Schedule A and all the weird mathematical calculations, the information on the individual employees and all of that, that the original application form had. And you know, when I did a video on the original application form, I said that if you needed help getting a PPP loan, you're definitely going to need help filling this monster out. And that is still true if you're stuck filling this monster out. But as I go through the short form, I hope you understand why you shouldn't have to. In any event, the first questions are kind of basic, and I'm really not going to bother with them. You know, your information, PPP numbers. It asks about the EIDL loan and the EIDL Advance. It's funny, I had a client ask me about this just today. She told me she got a PPP loan and she got the $10,000 EIDL grant. That $10,000 grant would show up right here. And when we get deeper into the form, you'll see it reduces the PPP forgiveness so that basically you can get a PPP forgiveness, you can get an EIDL grant and keep that money, but you really can't do both. And so there are all kinds of ways we can discuss this, but at the end of the day, you know, for the sake of conversation, let's say you got a $100,000 PPP loan, because we'll keep using that because it makes the math easy. You got a $100,000 PPP loan, you got $100,000, and you're eligible for $100,000 PPP forgiveness, but you also got the $10,000 EIDL grant. You'll wind up getting a $90,000 PPP forgiveness and ultimately needing to repay the $10,000. You can call it a PPP loan, you can call it a EIDL loan, and actually it does matter. But whichever way you go, it works out. It works out that you're paying back the 10 grand. One of the big changes that we have now as a result of the change in the law is the covered period is different. Originally, you had an 8-week covered period. Originally, that 8 weeks started the day you got the money. SBA was kind enough early on to change the rules so that you could have what's called an alternative covered period, so that you could get your money and then start your covered period the same day as you start a pay period, because otherwise, even this simple part, how much is your payroll, would be a horror show. But now, your covered period could be anywhere from 8 to 24 weeks. because they, again, changed the PPP program. And so, one of the big complaints about the PPP program was that they gave you 2.5 months of payroll money, but only gave you 8 weeks to spend it. And of course, SBA said that's because they wanted you to spend 75% on payroll, and then you could spend the rest on some other things. But in any event, a lot of people found that to be too challenging, especially since most people got their money at a time when their businesses were either formally closed, such as their restaurants or something, and governors across the country just simply shut them down, or might as well have been closed. We were open, sorta, throughout the period. Lawyers were declared essential, but we weren't. These were not normal times, and we didn't pretend at the time that they were. So now people are being told to spend all this money in 8 weeks when they're not really open, and people were complained, and so Congress changed it and made it 24 weeks. So now you have 10 weeks of payroll, 2.5 months of payroll, and up to 24 weeks to spend it, and you don't have to spend it all on payroll. You don't even have to spend 75% of it on payroll. It could be 60%, and then the other 40% on rent, utilities, and whatnot. So basically, the Payroll Protection Program has changed from a jobs-preserving program to a small business bailout. And look, we just had an employment report for the month of May, and everybody was surprised because it reported that 2.5 million new jobs were created in the month of May. 1 million of those jobs were in the hospitality industry. That's restaurants and entertainment venues and the like. 1 million jobs created in the month of May in the restaurant business and in the entertainment business. Hotels, as I said, hospitality. Those jobs were 100%, more than 100%, I'm sure, PPP jobs. Okay, those jobs were created by this program. And with the rule change, the people who did that are, I'm sorry to say it, but now kind of feeling like suckers because they did what they were supposed to do. They paid people who, for the most part, weren't working, and now they're being told they didn't have to do that. But it's what made the PPP program a great program to begin with, but a little cumbersome. And now that cumbersomeness is gone. And look, I'm as happy as anybody that it's easier to get a forgiveness. But let's just understand what has happened. So now as you go down the form, it just wants to know the numbers. What are your payroll costs? And by the way, payroll costs include not just wages, but health insurance, for employer 401k contributions for their employees, state payroll taxes, so that'd be like state unemployment and whatnot. And that's the number that needs to be at least 60% of the forgiveness now. Business mortgage interest, business rent or lease payments, business utility payments. I don't really want to dig into those. I think they're largely self-explanatory, and where they're not, we get pretty arcane in terms of, does your copy your lease count and things like that. But basically they want to know what money you spent, or you're allowed to spend the money on approved items, and those are the approved items during that 24-week period. And then you can apply for the forgiveness. One other thing, by the way, that goes into payroll cost is owner compensation. And I will talk more about that in a moment, because this is one of the areas that gets real interesting, particularly for unincorporated entities or pass-through, LLCs, single-member LLCs that are taxed as a proprietorship, because there's some funky tax rules that make that a different section than everything else. So For the short form, you basically just say, all right, how much did you spend on approved items? How much was your PPP loan? Because obviously your forgiveness can't be more than the loan. So if you spent, more than the loan, then that's reduced the loan amount. If you spent less, then your forgiveness can't be, of course, more than what you spent on approved items. And then the next question is your payroll more than 60% of whichever amount it is that you're trying to get forgiven? And then you just kind of take the smallest number that you have here. So, for example, we'll take the $100,000 PPP loan. Let's say that in the space of 24 weeks, all you can manage is to spend $50,000 on, $30,000 on payroll. Okay. Now, let me say this right now. You're spending other people's money. You're spending other people's money on people who used to work for you. If you can't spend other people's money on your own employees, or can't go out and find new employees to spend other people's money on, you're just not doing this right. And you need to sit down and think about this, and I've heard the complaint, well, gee, I run a restaurant, our dining room is closed. What am I supposed to do? And, train your people, clean the restaurant, have meetings with them to talk about better ways to do things. What do your customers dislike? How can we make our restaurant a better dining experience when we reopen? And again, you're paying your employees to talk to you about these things with the government's money. So what's so awful about that? But you're keeping your people, on the books. You're keeping them working, in a manner of speaking. You're keeping your business, locked and loaded, ready to go for when things reopen. And by the way, you now have 24 weeks to get yourself reopened. So, you should be able to find a way. And then, of course, if you're spending, the 60,000 of the 100,000 on payroll, then that enables you to spend the other 40,000 on rent, on utilities, and interest and whatnot, which you can't do if you're not paying your people. So, again, I know that this is a program that's received a lot of criticism, most of it, I think, unfair, from the small business community, because they're not really understanding the basic concept, which is, again, you're spending other people's money, the government's money. But in any event, but that's, on the short form, how you calculate your forgiveness amount. How much did you borrow? How much did you spend on things you're allowed to, on approved items? And is the payroll number at least 60% of that number? Oh, yes. So I was talking about the $100,000 borrowing. So you borrow $100,000 for whatever reason, you only manage to spend $30,000 on payroll. That means that your maximum forgiveness is $50,000, $30,000 on payroll, up to $20,000 on rent, utilities, and the like, and therefore up to $50,000 of forgiveness. Now, if you only spent the $30,000 on employees and only spent $10,000 on these other items, then you get a $40,000 forgiveness, and you have a $60,000 loan. Depending upon when you got it, that loan is either a 2-year loan or a 5-year loan. Hopefully that will change to just be a 5-year loan. But if you got it before Congress changed the system, which was June 4th, I believe, it's a 2-year loan. If you got it afterwards, it's a 5-year loan. Either way, it is a 1% loan. By the way, if it's a 2% loan or 2-year loan, you might be able to get your lender to stretch it out. But whatever it is, that's what it is. And nothing stops you from giving the money back. I read the most infuriating article in the program was first announced. Somebody got the loan, they were closed. And they go, on CBS complaining, oh gosh, this is awful. What do we need more debt for? Well, if you don't want to spend the loan on your people, then give it back. And you don't have more debt. You don't have a problem at all. And you certainly have no business being on CBS News whining about it. But again, you've got this pot of money to take care of your people with. It makes it easy. And you should be doing that. Now, let's talk about page 2, because this is kind of the conversation about whether or not you can use the short form. And I'm a little bit nearsighted even with my glasses on, but you can see here that it discusses an 8-week period and a 24-week period, and the dollar amount for which you're seeking forgiveness. And this is, to my thinking, the most interesting part of the form, because it discusses owner-employee compensation. Under the old rules, we were all stuck in an 8-week period. And during that period of time, the maximum forgiveness that any employee, including the owner, could have was 15,000 and change. There it is. A little over 15,000. I think it's 15,800 and something. And the way that was calculated is the maximum amount that you could pay a person for the purposes of the PPP loan was 100,000 a year. So that this number is 100,000 divided by 52 weeks in a year times 8 weeks. And if you use the 8-week period for PPP forgiveness, then that's the most that you can write off or have forgiven for any one employee, including the owner. Now what they've done is they said, if you want to take a longer period, a 24-week period, you can write off 20,000 or have forgiven 20,833, I believe that number is. I can't read it, but it's basically 2.5 months. $100,000 divided by 12 times 2.5. And that 20,833 is what the SBA gave you in the first place for owner compensation. And here's why it matters. The PPP forgiveness is not taxable. And the reason the PPP forgiveness is not taxable is because the CARES Act, which is the old stimulus bill that created the PPP program, said the forgiveness is not taxable. As a general rule, when debt is forgiven, it is taxable. So, so that was an exciting rule change that was part of the CARES Act. Congress is basically giving, not only are they giving you money to give away, but they're not going to tax you on it. It's free money in the truest sense. Well, this is the federal government, and what the one hand giveth, the other hand taketh away. The IRS came out with its own rules saying, fine, we're not going to tax the forgiveness because we can't, even though we, the IRS, tax every other forgiven debt. However, we're not going to allow you to write off the expenses that you use the forgiven money to pay for. So if you borrow $100,000 and you have $70,000 in payroll and another $30,000 in rent and utilities, and you get the entire $100,000 forgiveness, that's great, but you don't get to write off the $70,000 in payroll and the $30,000 in rent and utilities. So it ends up, it frankly ends up being the same thing as if you went out and earned $100,000 and spent it on expenses. There is no tax windfall there, with one exception. If you're a self-employed person, you file a Schedule C on your tax return, you never wrote off your compensation. You were always taxed on that. You paid federal income tax on that. You paid state income tax on that. You paid self-employment tax on that. You're paying every kind of tax imaginable on that money. There are no write-offs there. So here you go. You get $20,833 of PPP money. You pay it to yourself. The IRS forgives it. You write it off. There are no expenses you're using it for. You like that? That is, in fact, free money. So I would say to anybody with a Schedule C, unless there are other reasons to do so, and I might get to those in a minute, you should never take the 8-week period. You should always take a longer period. And you should always write off the maximum to yourself that you can. And in this way, you avoid paying any tax on the money, or you avoid losing tax write-offs. And I would say that even if under PPP rules, you're eligible for the forgiveness after 8 weeks because you used all that money to pay payroll and other approved expenses. Still, I would say to string it out so that you can write it off as a bigger payment to yourself and a smaller payment to everybody else, because then you can pay those people with your own money and your own revenue and write it off and use their wages to offset your income. So that is something that's fairly nice in this, and it does take some of the sting out of the IRS's rule. In fact, for people who are self-employed and have no employees, the only PPP money you received was owner compensation money. They took 8 weeks of owner comp. You got 2.5 months of owner compensation. That should have been your loan amount. Now, be warned, there are going to be some problems because a lot of banks issued PPP loans based not upon the Schedule C, but upon 1099 income, and that is going to come back to bite. But in theory, at least, your PPP loan was 2.5 months of owner compensation, and you should be using the entire PPP loan to reimburse yourself, and then use other money, even if it's your own money, that same money, to be paying rent, and anything else, because again, that's all tax deductible as long as you use this money on yourself. Now, the other interesting thing in here is that you make certain certifications, and some of them are that the statements you make above are true, and that you use the money for payroll and allow purposes, and including, paying yourself in the way that PPP allows you to. But the other thing is you can simply certify that you did not reduce your head count and you did not go around cutting your employees' wages. You see, what makes the long form so complicated, what makes this Schedule A such a bear, is they're worried. Well, since the point of the PPP program was that you keep your people working, if you had 10 people during kind of these relevant periods that are described in here, and it's all very bizarre how they do it. And unfortunately, part of what makes this thing such an animal is that they don't cover any normal period. There you go. Full-time equivalents between February 15, 2000 and April 26, I'm sorry, not 2000, 2020. And April 26, I believe that says 2020. What does that mean? I mean, I actually contacted my payroll company and they said, yeah, you just got to take your weekly, monthly, quarterly statements and get out your calculator and figure out what those things are. What were your full-time equivalents on February 15, 2020? Now, if you brought all your people back during your covered period, or by the end of your covered period, really, you're allowed to use just short form, and you don't have to calculate all of this. They ask questions about all your various employees who are on your payroll. It's under the old form, it was on February 15. But they're asking about all the various employees, oh no, who you once had, because they want to know, okay, fine. So you brought them back and you let them keep their hours. You let them continue to be, you know, continued on with your full-time equivalency. But did you cut their wages? Okay, so if you have somebody who you were paying, you know, $30 an hour, and you brought them back and for 20 hours a week, and you brought them back for 20 hours a week, but you only paid them $20 an hour, well, that's not exactly what this program was designed for, and they're going to penalize you for that. So, you know, if you're doing that, if you're not bringing your people back, and you're not paying them what you used to be paying them, then you're stuck with the long form. And frankly, you know, that is something that is easily avoided, because down here, they create some exceptions even for doing what you're supposed to be doing. And again, you know, as I said before, even though you might not have quite so much work for these people, it's not like you're reaching into your own pocket to pay them, okay? The government is paying them, at least as the thing was originally conceived. Now, for 24 weeks, admittedly, that makes it a little bit different, but it also means that you can wait until you reopen to hire them. But there are exceptions even to the bringing the people back. You know, as a lot of businesses have complained, because of the what's called the pandemic unemployment assistance, the extra $600 of unemployment insurance that laid off workers receive as part of the same stimulus bill that created the PPP program. A lot of times, these people are getting their loans, calling back their workers, and the workers aren't coming. They're making more money staying at home than they're making on the job, so they don't come back. The PPP form allows an exception for that. If you called your people back and they didn't come back, and you weren't able to find anybody to replace them, then they're not going to penalize you for that. And oh, by the way, if you were never able to come back, you know, let's say, you know, we all pray not, but let's say that there is a second wave before step 2 of phase 2 happens, and restaurants or nail salons, tattoo parlors, gyms, you know, health clubs are never allowed to reopen at any time in 2020. You'll still get your forgiveness. They will not reduce your forgiveness because you weren't ever able really to bring your people back. So again, if you're in one of these categories, don't rely on what I just said, because it's a little more complicated than that. You're better off coming in to talk to me. But there are even, you know, exceptions to the exceptions, which is to say, even if you don't just simply do what you're supposed to do and bring your people back and pay them with the government's money, you still get to have your forgiveness if you fall into one of these safe harbors. And so that's why I'm saying, if you're over here filling out the long form, you know, if you're over here trying to explain why it is that, you know, yes, you had this employee, but you cut this person's hours, or you cut this person's wages, or you're over here trying to explain that, yeah, I used to have 10 employees, but I only brought back 6. you're just doing it wrong. And there may be good reasons for being over here. And I certainly can think of scenarios where it might be a good idea to take the hit and you know, and not pay your people. But for most small businesses, you're better off, you know, using the money the way it was intended, and getting your full forgiveness. So that was fairly long-winded. I did not intend to get into this much detail, but you know, I get excited easily. So as I say, today's our big day. We have some guidance. As always, we do need more. I understand that the SBA will be rolling out another interim final rule. You have to love that phraseology, by the way, interim final rule, this Friday, and hopefully it'll clarify some of the issues that this form leaves. Like, for example, owner compensation. Up here, it gives you a choice: 8 weeks versus 24 weeks. Well, what happens if you want to do something in between? My guess is that as long as you're at 2.5, is that basically it's, you know, 100,000 divided by 52 times the number of weeks up to 2.5 months. So that if you're at 2.5 months or more, you get the whole number. And if you're somewhere in between 8 and 10 or 11, then you're somewhere in between. But the SBA hasn't said that yet. So that's just my speculation. But my guess is you don't have to wait the whole 24 weeks to get the whole 20,800 change. But as I say, as we go through these line by line, yeah, there are a lot of things that still don't make sense and need clarification, and that will be coming out. But we are a lot clearer today than we were yesterday, and we are a lot clearer now than we were a month or so ago. So this program is starting to take shape, and it really now is a situation where most people who receive PPP loans should be able to get those loans forgiven. And oh, by the way, if you haven't received a PPP loan, of course, you're probably not listening now, but if you haven't received a PPP loan, there's still $100 billion available. So now, you know, that people kind of understand how it works, and now that people are starting to reopen, they should be jumping all over that $100 billion. This is a good program for small business people. And it stuns me the extent to which people are not taking advantage of it. But the money is out there. The government's trying to pump money into the economy because this blowout, fantastic jobs report we just had was still 13.5% unemployment. And that is the worst in my lifetime. So that's horrible. So the government, wants people out there, businesses out there surviving, spending money, hiring people, doing what businesses are supposed to do to get this economy moving again. And the PPP program is part of it. And they loosen these rules specifically to get small businesses to take this money and spend this money and use this money. And so I would encourage everyone out there who hasn't availed themselves of this program to do so. By the way, the EIDL has also reopened. That's the one in which you might be able to get a $10,000 grant alongside a 30-year, 3.75% business loan. So that's another good program that's out there and still has money available that people should be looking into if they still think that PPP doesn't make sense for them. So if people need any assistance on this, I am around. We are open. We are trying to avoid in-person appointments, although I do have some. And we are available not just by Zoom, but also by through telemedicine portals that are end-to-end encrypted and more secure than Zoom for various video conferencing, screen sharing apps. So for anybody who wants to see me, I am here. And for the rest of you, until we get to see each other again, please be safe and be strong. And I will try to turn this thing off now. Thank you.